Ladies and gentlemen, good day, and welcome to the business update conference call of Cartrade Tech Limited. This conference call is to discuss the acquisition of OLX India's classifieds and auto business in India, and the discussions will be limited to this acquisition only. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vinay Sanghi, Chairman and Managing Director, Cartrade Tech Limited. Thank you, and over to you, sir.
Good morning, everybody, and welcome to this analyst call. It gives me great pleasure to announce the acquisition of OLX's business in India. We have acquired 100% of Sobek Auto, which houses two distinct business verticals. There's a classified business, which you all know as OLX on our phones, and there's a C2B or consumer to business automotive transaction business. So these are two distinct business verticals of Sobek, and we've acquired 100% of Sobek Auto. This acquisition was at a total cost of 535 crores. In the company, Sobek itself has approximately 115 crores of liquid assets or cash, which would take our equity acquisition value to about 420 odd crores. This acquisition entails acquiring 100% of the shares. Sobek Auto also signed a business transfer contract to acquire the entire OLX India classified business from OLX India, so it owns the classified business as well. And Sobek Auto also entered into a brand license agreement for 20 years with OLX being the global holding company, and entered also into a technology transfer contract. So all the technology created by OLX in India transfers to Sobek Auto, which will in a way transfer to our ownership. So we're really excited to announce this. We believe that it's a fantastic acquisition for our entire portfolio. As I said, there are two distinct businesses. The OLX classified business, which carries an element of automotive and non-automotive. Automotive here is about 50% of the entire business. And the non-automotive side is another 50%. Non-automotive categories include electronics, jobs, furniture, real estate, etc. Also, we acquired the C2B transaction business, which of course 100% automotive. Last year, they transacted almost 50,000 vehicles in that business. So these are two distinct verticals which were acquired. Just some key metrics. It's the largest used classified platform in India, over 100 million downloads. What we love about the classified business is it's a lot like our current businesses, where it's a very large amount of organic traffic or traffic that they don't pay for, and that's one of the reasons why the classified business is extremely profitable. They get monthly 35 million unique visitors per month, almost 32 million listings per year, very, very dominant in the listing space. On the transaction side, they inspected 350,000 vehicles for auction, sold at the rate of about 35,000 vehicles a year in the last month. The GMV on the transaction side is 1,660 crores. The total net revenue for the company, which is the classifieds and the transaction, this is the revenue and the fees, not the GMV. It's approximately 285 crores. It's a cash-free balance. The classified business, and these financials have been circulated, the classified business itself has a revenue of 177 crores out of this, and has a profit before tech cost, and I'll come back to tech cost, but before tech cost of 111 crores, which is a high margin business. The transaction business has a GMV of 1,600 crores and net revenue of 108 crores. And these are all July annualized numbers. and has a loss of approximately 89 crores per year at a run rate of 89 crores a year. This has come down over a period of time. One of our big objectives, going forward immediately is to fix the unit economics in the transaction business. The classified business, because is extremely profitable already. And if we combine these numbers of the transaction business and the classified business, we get a GMV of 1,837 crores, a net revenue of 285 crores, and a profit before tech costs of approximately 23 crores at a run rate of 23 crores per year, which means the classified is highly profitable and the transaction business, C2B transaction business, is of course losing money, but of high potential in the future. What we'd like to do immediately as an action is fix the unit economics in the transaction business and bring down the loss there immediately. And of course, continue to go in the classified business. There's also a tech transition which is taking place. The entire technology built for running OLX in India has to be transferred, and that tech transfer or the tech transition is going on. We expect it to be absolutely complete sometime between December this year and March 24. That work is underway. So it's owned. It is owned. The entire tech in India will be owned by Subek Auto, which is the company we've acquired. There will be a cost for this transfer. Approximately, we feel, even though the transaction value of the purchase price was 535 crores minus the cash, which is 420 crores, there'll be an additional cost of approximately roughly 60 crores till March on the entire tech transfer and the tech in the migration of the tech. Post March, the tech cost will dramatically come down as we completely have it in house with our own tech teams to manage and grow the technology and products of this business. There's a very high level amount of data here. As I said, we're extremely excited about both the classified and the transaction business. Although the transaction business requires the unit economics to get fixed. As you know, our track record of the last few years of fixing unit economics in businesses, we will of course attempt to do so here as well. When we look at the classified side itself, the first time part of this business has got a non-automotive side, which we're extremely excited about. The electronic side, jobs, homes, furniture, etc., etc. But of course, we're extremely excited about the automotive side itself, which is 50% of its business. And as we said, for us, it in many ways changes the way we look at the Cartrade Tech Group over the next 2 to 3, 4 years. When you look at the total users, when you add 35 million users here and another 34 million in Carwale, Bikewale, and the other platforms of the group, we're almost at 68 million users per month, which is a phenomenal number. And of course, takes our revenues and profitability to another level of scale. This is what I had. I think we've circulated a presentation earlier. I'm happy to go into question answers and clarify all your doubts on this acquisition. I just want to reiterate how excited and happy we are to be able to get this done. Thank you.
So should we open the floor for Q&A?
Sure.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Siddhartha Bera from Nomura. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity.
Good morning, sir. Thank you.
Good morning. Sir, on the classified business, I had a couple of questions. First is, some color can you share in terms of the history, how these revenues have grown, say, in the last couple of years? And given as you are integrating into our current business, so any thoughts you have on next 3 to 5 years? Where do you want to see in terms of the scale for this business? And second is, on the margin side, so we understand that 60 crore will be the one-time cost of tech transfer. But after that, say from maybe Q1 of next year, what can be the sustainable amount of this tech cost which may come? And what will be the synergy benefits, given that we already have a big classified sort of business? So how to understand the synergy benefits between this and the new OLX business?
Sure. I think the first thing was the growth rates, right? over the last 3 years, and some of the data will become clearer in the next few calls we have. But roughly the growth is about 20% in the last couple of years for the classified business. That's the first question you had. I think over a period of time, the investments from OLX globally has been in the transaction business. We, of course, believe that the classified business is extremely valuable, and we want to make a lot of attempts to invest in the classified business and, look at catering to all these 30-odd million users. So that's the first question you would ask. I think the second one, the tech costs. And the tech costs are to be incurred really, for a period of 6 months to transition this, and these costs are global costs are being incurred to OLX globally to transition the tech and use their services for this period. We believe that eventually, sometime between, as I said, January and March next year, we will incur or recruit or have our own teams running technology and products for this company. And we're in the process of making that transition. At that point, we believe the costs will come down dramatically, maybe by 40, 50, 60%. At least we believe that. So that's the second part. The third question was around margins next year, right? The classified business is extremely high margin. As you can see, 111 crore trading profit, right, before tech costs. We definitely think these margins will continue in the classified business. We believe that the margins on the transaction C2B business will change, and we feel pretty confident that we will bring down the cost to get to a very, a reasonable unit economics in that business. So our attempt is to fix unit economics in one business, grow the classified business and its profitability and revenue, and transfer the tech internally, right? I think these are the three basic objectives for the next few months.
Got it. Sir, on this again C2B transaction business, so I think 6.5% net revenue margins are quite healthy. So can you slightly detail in which areas the unit economics is not currently sort of good, and we need to address that? And if I look at like over the next couple of years, the business scale, as you had said, it has come down from 50,000 to 35,000 now. So for the next couple of years, what will be our top priority? Will it be sort of growing the business or maybe bringing down the losses? So some thoughts there.
Yes, I think the 2-3 areas of cost. I think, of course, one is there's the cost of marketing, right, which we feel with this whole acquisition and synergy and giving access to Cartrade customers also to a C2B platform should bring down the marketing costs. I think that's the first objective for us. And then the various intricate processes which are being done in the transaction business right now, a flavor of which we send in the presentation as well, which we obviously want to bring down and optimize, right, without sacrificing customer centricity, right. You have to remember that OLX ran this as a global business, and therefore historically there were lots of costs which existed, which we feel we can pull out of the system. At the same time, enhance customer experience, right? So that's clearly in the transaction business, it is not the focus. On the classified business, I said highly profitable growth is a focus. On the transaction business, we are looking to fix the unit economics. Even if we sacrifice a little bit of growth, we're definitely looking to fix the unit economics first.
Got it. So marketing cost will be what percentage of maybe, I don't know, net revenue or gross revenue, and what is a sustainable number you can look at there?
Yeah, we feel that, we want to bring it down to, as you've seen Cartrade and you've seen OLX, the classified business, we like organic businesses where customers come because of the experience and not because we spend a lot of money on marketing. I think it's pretty similar here. We want to make sure the transaction business is really getting customers from OLX, the classified platform, or Cartrade, and really on coming on because it's a superior customer experience we can provide. And not being built on marketing costs. So we're very clear that we're going to bring it down from what it is today.
Got it, sir. Thanks a lot. I'll come back in that.
Thank you. Thanks, sir. Thank you.
Thank you. Our next question is from the line of Sachin Dixit from JM Financial. Please go ahead, sir.
Yeah, hi, Vinay. I had a bunch of questions. So first one, basically, with regards to this transaction business, possible to share any data on unit economics? Because right now the filing is very, very high level. Like we don't know what is happening. Because there is almost a 200 crore cost item between the net revenue and PBT profit.
Yeah, we will give you a split up in future calls, and of course give a cost build up. But the two basic costs are people costs and marketing costs. marketing for customer acquisition costs, and people are really for conducting all the processes which are required. Even though this is, I can elaborate a little bit of the process. The process really involves the customer coming into OLX, the transaction business, and asking for an inspection. And the vehicle is inspected at the customer, a seller's house, which is you or me. And when the vehicle is inspected at the seller's premises, the vehicle is auctioned to a large number of dealers in India. And then there's an auction price which comes out. Once the auction price comes out, OLX or Sobek buys that vehicle from the customer, keeps it for a day or two, and then sells and then collects money from the dealer which won the auction and delivers it to the dealer. So it's like a C2B platform, even though there's no risk on the transaction because every quote given to a customer has got a back-to-back dealer quote. It does hold inventory for 2 to 3 days in that process. A very low amount of inventory. It's almost asset light, but it does hold it, right? So this is the process. So there are most of the costs are the certification cost, the operating cost of picking up the vehicle, keeping it, giving it to the dealer. That engine or that cost is what the people costs are. And then the cost of marketing, which is customer acquisition. So obviously we feel that in this process, there's a bit of optimization, which we can obviously do, right? That's what we feel.
And there will also be some cost of warehousing, etc., right? Because if you are even the past warehousing, because
yeah, there is some cost, but it's not significant. But there is a cost of keeping the vehicle for that 3 days. There is some cost. That's correct.
Right. Okay. My next question is with regards to basically the profit.
And that's where that's also that we might see some synergy because Shriram Automall has 130 automalls across India, so we might see some cost synergy there itself in stocking these vehicles. Sachin, yeah, we might see some synergy there in cost.
So, my next question was on basically the profitability of this entire business side. So currently, pre-PDT profit is 23 CR. And even if we assume that the 40-60% dip in tech cost that you talked about, which is currently roughly 10 CR a month, actually happens. So you still have at least 5 CR tech cost a month, which is 60 CR of annualized numbers. So basically,
probably. Somewhere in that range, somewhere in that range we think we bring it down to. That's right. But we also see the transaction losses coming down dramatically, right? That's what we see.
Right. I mean, basically, so 50 CR, assuming that the tech costs are coming down and then the transaction unit economics also improves further. So net, this entity might continue giving us losses for maybe the next fiscal year at least.
To give us profits. Yeah, we feel pretty confident that should happen. Absolutely correct.
No, I meant like the entity might continue in losses for the next fiscal year.
Oh, no, I don't think so because if you have 111 crores profit in one business and you're able to bring the unit comes to the other one, and then you have tech costs, it's bound to be profitable, the company. We feel pretty confident that next year, post the PDT costs, it will be profitable.
Understood. And just one final question. This is more on like what differentiates basically Cartrade from some of your peers, right? So when you think of OLX, which was running this transaction business earlier, they have a lot of classifieds or free traffic, as you have mentioned. Your peer Cardeco, which also has a similar business model as a Carvali model, where there is a lot of organic free traffic. They also did this transactions business, and they actually shut it down and then gave a public interview that this business can never make money. What is giving you the confidence that you can actually improve those unit economies if OLX has not managed to do it, Cardeco has not managed to do it? And honestly, think about Cartrade before and all.
Sure. Yeah. You're right. I feel one is the model itself is less asset heavy. Marketing costs needs to come down. And there are tweaks. I think the fact that there have to be tweaks in the processes to make sure that the economics changes, right? Staying asset light. I feel like one of the things we're going to focus on is sticking to our core principles at Cartrade Tech Group, which is staying asset light, and that's why we've always been profitable. And applying these rules to C2B transaction business, we feel pretty good that we'll be able to turn it around. But anyway, bring down the losses. We feel pretty confident about that.
Okay, sure. Thanks.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Vijit Jain from Citi. Please go ahead.
Yeah, hi. Thank you. Hi, Vinay. Hi. I have two questions. One is on the classified business. If I look at this number, right, 177 crore, this is pretty similar to what you have in your standalone business as well, right? I mean, give or take. But a pretty highly profitable business at 111 crores. So I'm just trying to understand what makes the profitability here so high, given that, your marketing spend itself also is not especially too high, right? So, the cost structure is just 60 crores for OLX's classified business entirely in India. Is that how we should understand it?
For OLX Classifieds, that is correct at this point. You got to remember that the PDT or the tech cost is kept out of this.
Right.
And there will be some tech cost here, which will bring down that 111 crores itself.
Okay.
But beyond that, I think one has to also keep in mind that OLX is a general purpose classified, it's a horizontal. Carvale is a verticalized business.
Right.
There is someone like you, and I think that's one of the things we're very excited about. There's someone like you who's selling a car today on OLX, and 100 million people have got it on their phone. And tomorrow, that same person selling, a phone, and third day selling a furniture item. So the user base is one of the few platforms in India which has got a very strong listing, 32 million listings a year. That's a phenomenal number, right? There's no equivalent, probably, marketplace in the country, right? There's so many listings coming up every year. And many of them are paid. So people pay to list their products. Consumers like you and me pay. Right. So I think the business is slightly different from Carvale. Carvale is a verticalized automotive, new car, 80% new vehicle business. This is a used product. Used products are sold on OLX, right? And obviously the classified is completely asset light again, almost zero marketing cost. And therefore the unit economics are extremely good. And that's one reason we are excited about the whole transaction.
Got it. And when just to clarify, the product and tech costs that you talk about, the 1.2 million a month, which will come down by 50-60% next year. Just wondering, is this primarily people cost or there's
services and people both? It's the cost of the global OLX network to deliver this tech to us. Obviously, it is in their environment right now. It's not in our environment, which means infrastructure or every cost is incurred by them globally. And I think for us, we obviously believe that whether it is people cost, whether it is shared services cost, it will dramatically come down once we take it over in India.
I see. So would that entail you taking over some of the employees which are currently still within OLX's global?
Yes, the intent is to do that because there's a very, very high quality talent there. Number one, these people have actually been involved in building the global product. So yeah, the intent is to do that. And the intent also bringing people from out. I think it's a combination of both. But there's already a core team of people which will transition internally from the global team to our tech team to look at this product going forward.
Got it. Understood. And my second question is on this C2B transactions business. Just trying to understand from a dealer perspective, your whole platform as an offering to, let's say, used car dealers overall. You obviously have Appsure, you have Shriram Auto Mall, and there'll be a dealer network for this business you're acquiring as well. So is there a decent level of overlap there? And, is there a thought to combining your dealer interface here so that, you show a combined unified offering to dealer and, I don't know, maybe optimize how much you can make out of those dealers? Just your general thought on how much of, from a dealer perspective, these three businesses overlap.
Yeah, there is an overlap in terms of what the dealer needs to do with all these platforms. Or there may be some overlap of the dealers itself. So there are different ways of connecting with dealers right now. One is, dealers can buy vehicles on OLX as a transaction platform. It's also the largest used car dealer selling network on OLX Classifieds. So most dealers in India would list their cars on OLX for sale to customers on some classified side of the business, right? So already OLX caters to dealers who want to buy cars and dealers want to sell their cars, right? Automatically, right? Carvale caters to all dealers who want to buy cars and sell cars as well. So, and there is an overlap there. And then Shriram Auto Mall caters to dealers who want to buy cars in auction, right, as well. So there is an overlap in all these three. I think our intent would be to, in the medium term, not the short term, is to look at tech which enables dealers to seamlessly do it, right? I think that's the intent here on any of these platforms. And that's a tough job, but I goal would be in the medium term to integrate tech in a way that is seamless for a dealer to interact with any of these platforms. That would be the intent, just from a sheer convenience. If you want to buy a vehicle on Carvale or sell it or OLX, it should seamlessly be able to do for a dealer. That's the intent here. But that will take some time and make it very convenient for dealers, actually. But also I want to stress here that the intent is to run OLX as an independent subsidiary, 100% subsidiary. It's got a phenomenal classified side to it and a transaction side and a very different set of users. As I said, the users on OLX are people who have that app on their phone and, use it for multiple things, not just auto.
Mm-hmm. Got it. Great. Thanks. Those are my questions, Vinay.
Sure.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Yeah. Hi. Thanks, Vinay.
Rahul.
And congratulations.
Thank you.
So just wanted to clarify one thing. So from a customer standpoint, Carvale and OLX will continue to exist separately, right?
Oh, absolutely. Carvale is, first of all, 80% new, right? OLX, 100% used. And the objective is to allow customers the capability of the best of everything, whether it's OLX or Carvale, absolutely. So both will exist, both will grow, and both offer very different value to the user, right?
So suppose there's a person who wants to list, a car for sale, he will have to do it separately on an OLX and on a Carvale.
We haven't, that's a bit of in Carvale and OLX, one overlap is customer listing a used car for sale or dealer listing used car for sale. So the intent will be over time, as I said, in the medium term, make it seamlessly easy. If a user wants to list on Carvale or OLX or only on Carvale or only on OLX, right? Make it simple for them to do so. Whether it's a dealer or an individual, I think we'll enable at some point the capability for consumers or dealers to do so, but it's probably left to the choice of the user what they want to do. But we'll try and make tech in a way or handle the tech in a way that is seamlessly easy.
Sure. And just one more clarification. So if I were to look at this 177 crores of classified revenues, you said half is auto. So about 90 odd crores is used auto in OLX versus around a 25-30 crore kind of a number in terms of our standalone used auto. So would that be the right comparison that OLX used auto is 3 to 4 times of Cartrade used auto?
The classified side the used classified side is correct, but the group also has used auctions, which is Shriram Automall, which is 100% used. But if it's a classified side, OLX is much bigger on the used class. That also is something that actually excited us when we looked at the acquisition. They've got a sizable used classified business, which is multiple times Carvale. That is absolutely correct.
Sure. And Vinay, then to your mind, how important is this, asset-heavy C2B kind of business in terms of OLX perspective? Where, if you were to kind of improve the unit economics on that, the effort on that would also in some way, start curtailing volumes in terms of that as well, right? So will that have an effect in terms of the classified piece of used autos in OLX getting impacted in some way?
Not at all. The classified is not connected with this at all. The classified actually is it's like a universal marketplace, right? This C2B in some way is an option to a classified user to go through this path. So the C2B doesn't affect the classified. In fact, the classified affects the C2B if at all. It's the other way around. The classified universe is just so large and C2B is a fraction, just an absolute fraction of what the classified users are, right? It's a very, very small segment of all classified users come to C2B at all. In fact, one of our attempts is to get more users from classifieds to C2B, but it's actually very small at this stage. So the classified is almost like the mother and the C2B is like a child, right? In some way. I think our attempt with the C2B business, what we want to do is what we've done with Shriram Automall, what we've done, or what OLX is trying to do, both are auction businesses. We want to enable a seller, someone like you or me, or in Shriram Automall's case, it could be a business seller, like a bank, we want to enable a system where they get immediate price in a transparent, and you get a price in immediate, immediately in a transparent manner, right? Or easy, and get, some kind of price discovery. Now the question is, how do we fix the unit economics to do so? For us, it is imperative that when we do something like this, the customer must get fantastic value and the business must make money. I think that's the basic fundamental rules which we want to work through. And we've got to fix it. I think we will make sure that, we first fix this before we, start looking at growing volumes, et cetera, et cetera. The first role would be really to make sure that we understand whether it's marketing costs, how do we make sure we fix this first, our processes? I think that's our attempt at this point.
Sure. And in terms of the non-auto classified, the 50% part of the classified revenue, so over there, should we think of it as a well-oiled machine and no, major investment, etc., will be required on the non-auto side, and that will continue to chug along? So
absolutely. I think the non-auto is not requiring cash investment. It will move around. It will keep going. But we want to make sure that we take advantage of the categories that exist out there. Many of them are under-monetized, very under-monetized, right? It's probably the largest destination where people sell electronics or other items, right? So we want to make sure that with great products, we make it easier for a user to do so and grow those businesses. I think we are of course excited about the auto classified side, but we're also excited about the non-automotive side of this business.
Got it.
But if you're asking if it requires cash investment, these businesses don't require cash.
Yeah. So anything we'll do probably will be in the existing categories that you highlighted, right? Electronics one, furniture, etc. would be another.
Jobs, homes.
Jobs, yeah. Got it. Thanks a lot.
Thank you. Thanks.
Thank you. Our next question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah, hi, good morning.
Hi,
Vinay, congratulations on company.
Thank you.
Yeah, just 2-3 first clarifications, then I'll come to my questions.
Sure.
Number one, we will continue to be allowed to use the OLX brand in India after the acquisition, right?
So this quick thing, yeah. We've signed up an IP licensing agreement for 20 years.
And will the outgo for this be meaningful, or it will be a small number?
No, it's not meaningful. It's a small number. It's not meaningful.
Okay. Secondly, you talked about bringing down the marketing cost. Can you give us a rough idea, if not the actual numbers, or what kind of marketing cost range is OLX incurring? Just wanted to see what could be the reduction that you can do from
here. Roughly, it's about at the rate of 40 crores a year at this point on the transaction side. At this point, it was higher. It was much higher, but it's down to about 40 crores.
40 crores is the total marketing spend of OLX in India. That's the right way to look at it.
Right? At this point, yes, correct.
Okay. And thirdly, your presentation talks about that the tech transfer cost will last till December, and from January it will be completed and everything. But you mentioned
I said
March.
somewhere. Actually, the project's underway, so it's between somewhere in January and March. That's what I said.
Okay. So basically the actual
it could be January. It could be January. It could be March end. I mean, this not.
Okay. Sure. So basically FY25 and FY24 it will be done.
Yes, that is correct.
Okay. And just one last thing on OLX. What I understand is OLX is looking to sell their auto business globally, and this transaction is a part of that strategy which they are following globally. Is that the right understanding? And if yes, then was OLX also looking to sell the non-auto business, or it came as a parcel and you had to buy the non-auto business also? So just wanted to understand the thought process around that.
No, clearly when we were first told, we were excited about the auto business because that's what Cartrade Tech is about, automotive marketplaces, and that was the first intent. We were excited about that. As it went on, it became apparent that it's the entire classified and the automotive business. And to be honest, the non-auto also excited us because we saw the data and the numbers. We just thought that categories which are not created and can be created in India, and they were very strong, very, very strong at it. So it did excite us much and got us even more excited about the transaction after that.
Okay. But the marketing, let's say channels or where you market to get traffic for your auto related customers and for non-auto customers will be very different. Don't you think that? And for that reason, basically the marketing cost you will need to continue to incur for at least the non-automotive business.
The marketing cost on OLX is incurred only for the business, not the non-automotive business first. This 40 crores incurred entirely in the automotive business, entirely in the transaction side of the business, not in the non-automotive. And I said earlier, if you have, so many downloads on a phone, I think it's the same user putting up a car today, putting up another item tomorrow, right? Or using it to buy a home, right? Or rent a home. So I think the user is the same, and I think that's what we're excited about. Unlike car wale, where someone will come to buy a new car or sell a car once in 3 years, the user actually uses this very often. And I think that leads to, very low marketing costs, or almost no marketing costs, because the app is used for multiple purposes. The user always just stays on.
Okay. And on the classified business, just wanted to understand, I would assume that there are two revenue streams. One would be the advertisement revenues, and second could also be basically the listing charges or subscription packages which OLX would be charging to the dealers, right? Is that a correct?
So I'll give you. There are basically 4 different revenue streams. Mm-hmm. There's one stream which is used car dealers classified revenues, right? Mm-hmm. The second is listing fees from consumers like you and me selling a product, right? Could be a car, could be an electronic item, could be anything. The third revenue is ad sales, which is advertisers putting, advertisements on OLX. And the fourth stream of revenue is dealers of non-automotive advertising on OLX. So basically 4 streams.
Okay. And while maybe at some point in future, would appreciate if you can share the breakdown broadly.
Absolutely.
But right to assume that ads will be a bigger part of it, or it will be the fees which will be a bigger part of it?
The listing, if you look at the order, the used classified is the largest. Then the all the 3 are like, I would say ad sales is the second largest probably, but similar. All the others are similar.
Okay. And see, if I look at, you also have a used car dealer business where you
yes.
where you allow the dealers to take subscription packages and list their products at your website, right? So there will be so the point here is, I think you alluded to this, but at some point of time, if you can articulate the medium term strategy, because you have a lot of overlap in the business, right? Your used car business and OLX's used car business. I'm assuming a lot of dealers will also be common between the two platforms who would be listing their products. And they may not.
OLX is a much larger platform. There is some commonality, but OLX is a much larger platform.
Okay. So maybe at some point of time, you might want to continue, or you might want to adopt OLX for the used car business and Carvale for the new business, and maybe have a.
We're not looking at that, and honestly, not looking at that at all. I think what we want to make sure that the dealer decides they want to be on OLX or Carvale or both, right? I think we just got to make tech easy for them to do so. But eventually the dealers got to decide what adds value to them. There'll be some dealers who like Carvale for a reason. There'll be some which, like OLX, and some will want both, or some have both already. It won't matter.
Okay. And lastly, the C2B transaction is basically also the kind of similar which Cars24 also do at a bigger level, right?
It's actually very similar. That is correct.
Very similar. And what kind of synergies do you see from your auction business to this? Or maybe you can use some of your tech, some of their tech to your auction business, or how do you think that could play out over a period of time? Because this is an interesting business, and you get a lot of dealers who are buying vehicles from would be buying vehicles from this auction business, right?
Yeah, the obvious synergies from the auction are the dealers, being able to bid on both vehicles, right? Whether it's an OLX car or a Shriram Automall car, right? That's one. The second is tech synergy, clearly, right? Which platform works better for what purpose, and what are the technologies which, OLX has, which could work on SAMIL and vice versa. The third, I think, massive, synergy is data, right? I mean, if you look at the quantum of data between OLX, SAMIL and Carvale, just data of understanding vehicle pricing to other things like today for a user, if you could make, with the amount of data we have, make it easier for them to make decisions on what they want to do to sell a car or buy a car, etc. with price data, for example. Or ability for dealers to give faster quotes just because of the number of dealers on both these platforms. These are all synergy we're working through, but they'll take time. These are medium-term answers. They're not short-term answers. Exploiting synergies like this would take us maybe, 12 months, 24 months. And I think the third synergy will be cost, right? Because if OLX, the transaction business, has got locations where they keep vehicles, and SAMIL has 130 auto malls, can we leverage those locations? So they're all, we're thinking of cost synergy, we're thinking of data synergies to help users, we're thinking of, obviously tech synergies, user synergies, consumer synergies, or dealer synergies, all of them, right?
Sure. Just lastly, one small point. In C2B business, all the auctions or let's say if a customer has to go to OLX or to get their car listed, it is completely an online, or do they have small stores or small
No, it's online. You can get on OLX online, and the flow takes you to say, listen, I want to sell my vehicle to OLX Auto, the transaction side. And it just goes there. And yeah, you don't have to walk in to physical location.
There are no offices or there are no walk-in physical.
You don't need to walk in. No, you don't need to. They have franchise stores, so B2C, but they don't, like I'm sure, but they don't have, it's not a C2B store. You basically do that online. You don't have to come anywhere as a user. You just somebody come to your house and check your car.
Okay. And this B2C business also you have bought in with the franchisee stores they have, or that is not part of this deal?
No, we bought everything on OLX in India. So any franchise store OLX you see is part of the OLX classified platform.
Classified platform. Okay.
So we bought in almost, I think the 120 or 130 OLX franchise stores, if I'm not mistaken.
And they also work on asset light model, and assuming that they are not.
It's asset light. They're all asset light. They're absolutely asset light.
Okay. Thank you, Vinay. Thank you so much.
Thank you. Thanks.
Thank you. Our next question is from the line of Pankaj from Affluent Assets. Please go ahead.
Thanks for taking my question. Just wanted to understand, with this acquisition, where does it take our market share to on pan-India basis? And secondly, do we plan, as you in answer to previous participants' question, you mentioned that the business model is more or less similar to Cars24. So do you plan to forward integrate into scrapping the vehicles and getting into that type of business?
See, there are two parts which we acquired. One, the classified side, which is just about, users like you and me and, listing vehicles for sale to consumers. So that's one part of the business. It's very hard to look at market share because it's a horizontal, versus some of the other automotive players. So it's very hard to get. And then there's a C2B transaction, which overlaps a little bit Cars24. So these are two players there. But, we are not looking at getting into scrapping, or it doesn't change, scrapping doesn't come onto these exchanges. Really, it's about you selling your car and getting a simple, easy manner to sell it off, or a convenient way to sell it off. And that's what the system involves.
Okay. Well, so next, this in future timeline, when do you see this OLX business getting completely integrated into our business? And thereafter, what type of growth do you see over a period of time?
Obviously, we see, the tech side, as I said, will take between, maybe 4 to 6 months. The growth, we're very bullish about the sector, whether it's horizontal classifieds or the C2B side. So we believe that, you have reasonably good growth rates. Obviously, I don't want to give a guidance around it, but we've given you what the past growth rates have been. So we definitely see, reasonable growth rate in both the transaction side and the classified side.
And any synergies leading to cost savings?
There'll be lots of synergy on costs. So obviously tech costs are one, costs of location, physical locations, another one. Across the board, we see cost synergy. So we're going to be working on it, but mostly around tech and physical locations.
And how has been the profitability of OLX? Were they better off in terms of profitability margins compared to us, or lesser than us?
So we've shared the numbers with you. The classified side, of course, is probably a little better than us. On the transaction side, I think Samil is far more profitable. So on one side, Shriram Automall is far more profitable than OLX transactions. Then on the other side, the horizontal classified OLX, in terms of margins, seems a little better than Carvale does. So I think that.
So on overall basis, and classified and transactions,
it's too early to compare. I'll be honest, it's too early to compare. I think it'll take us about 6 to 8 months to get the tech transition, all of that, and then, draw comparisons. But the idea is not to draw comparison. The idea is to make them both grow, so.
Yeah, agreed. But at this moment, would the acquisition be margin dilutive in nature?
No, we don't think that will be margin. After the 4 to 6 month integration, we don't believe it'll be margin dilutive at all.
Sure. Thank you. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, due to time constraint, that was the last question of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you, everybody, for joining. We're all really excited about this new phase of our journey. And as goes on, we'll keep communicating and sharing more and more information and our excitement with you. Thank you again for joining. All the best. Take care. Bye-bye.
Thank you.
Thank you.
On behalf of Cartrade Tech Limited, we conclude this conference. Thank you for joining us, and you may now disconnect your lines.